Hello traders, Gary Wagner here, about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, the 5th day of August, 2015, and this is the daily report for gold and silver. We do have gold trading moderately lower on the day, off about $3 if we look at the FX or the spot market. 1084.42 current print, low 83.10, so we're just off the lows, high 92.57 on the day. When we look at COMEX closed at 1083.60, putting it down about $7 on the day, low 82, high 91.70 on the day. Of course, we've got this market extremely quiet right now. It is drifting lower, but it is all based upon a simple report, not so simple actually, but the July jobs report coming out on Friday, because the expectation in terms of the numbers themselves, the anticipation is around 200,000 or 220,000, I believe. Any jobs report that comes in much weaker than expected, meaning under 200,000, we would see or could see a pretty defined rally build in the market and push gold to the upside. If it comes in at expectation or 220 plus, you can expect the dollar to really firm up at that point, because that would signal that it is more likely than not that come September, we will see a rate hike announced by the Federal Reserve at their FOMC meeting. So that is what the market has been waiting on. And that is why I believe we've seen this market, in essence, fairly quiet on the day and actually quiet on the week. When we look at the most recent activity, and this, of course, is a 720-minute chart, we've talked about this. This is in Japanese average format, but you really have this consolidated trading range between 1100 or so, 1100, a little bit over that on the upside, and 1080 on the downside. Now, predominantly, we are short, but it's not that I am a scared short, but I realize we are short with the multitude or the vast majority of traders in the marketplace. Commercials are actually neutral at this point. And my sense is that they are looking, or the smart money right now is looking for any scenario, any kind of a situation in which they can get these shorts to cover. And that would be including ourselves. And that's why I've been so cautious on this trade over the last week or so, because I believe that there is the real potential, if the proper fundamental news comes out in the market, for that squeeze play to be initiated. Now, really, we've got this range. And so because of that range, just as we have our positions roughly at above 1107, from what I have heard, 1107 to 1110 is really the number where you'll start to see short covering. That would include us also. So if in fact the market breaks, it does have to break fairly sizably, call it up $20 minimum, breaking not only above 1100 per ounce, but breaking above and or two, call it 1107 to 1110, and that would really cause a lot of short covering, and that could propel the market. Now, if that in fact would happen, what would we look for? Well, if the market does break above, for example, in my personal sense is that it will not, but I could easily be wrong. But if it breaks above that, you really don't have real resistance in the market till about 1140, and that's based upon really these sets of lows that came in mid-March of this year. So that's really what I'm looking at in terms of where I think this market could go. Now, let's take the other side of the coin. We know what's going to happen if we're wrong and a stop is hit. And in fact, if that happened, we would probably recommend, and I'll throw this out so it's an idea that you could actually follow through with. But if you see that jobs report coming in much lower than expectations, say 200,000 below that particular number, and you see them beginning to really move gold prices up. And really what you'll want to look at, of course, is the dollar. But if you see that dollar beginning to surge, you can not only exit that trade depending on where it is, and a little bit of profits or a push, but actually get long and ride that, as I said, up to about 1135 to 1140. Now, let's assume that our position holds, the jobs report comes out favorably, the dollar gets strong, and we continue to see this market fall. Well, then where could we see this market go to? And really, to answer that question, we've got to take a look at our real long-term studies, our monthly. Now, why our monthlies? Typically, we don't look at monthly charts to look at support and resistance levels. The fact of the matter is you've got this 61% retracement level. Now, this is a retracement level that takes into account the move from just below 700 up to above 1900 in terms of a price of gold. Effectively, we had tremendous support in this area throughout 2013, 2014. It never really veered too deeply below that point. You've got a couple of extreme lows that came in at the end of 2014, but not until we saw the severe break, which occurred, of course, last month, in July of this year, did we actually break below it. And I think that's a genuine breakout. Now, should we see this market continue, and that's our basic anticipation, we've got two real genuine points we want to look at. The first point is basically based upon this low. The reason we pick this low is if you take a look at this first rally, it makes this high above 1,200 and then comes back down to 1,000 right in here, just above 1,000. And so that would be a really important number. And then, of course, that century mark 1,000, if we then go back further to get any other point in time. In other words, you've got a critical area right here that would provide support on a technical basis, and then you've got this 1,000, and you can absolutely see where that was a critical area of resistance. This, according to Steve Nissan, would be called a scouting party, where the bulls are testing the fortitude of the bears. The bears were able to push the market back down, and that occurred really throughout 2008. Again, a monthly chart, but 2008 took this market from 12 down to these lows of 700. And so when it started to rise back up, it had real resistance at that point. So you've got two basic points. You've got the $1,000 mark, and then you have this particular low right here, which comes in, call it at 1036. 1038 in that area. And I truly believe if we get the break that takes this market lower, it could easily travel to about 1040, 1038, and it could trade as low as 1,000 in terms of where we're looking at this market to go to. Maintain your current short position, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading, and we will talk to you tomorrow on Thursday for another daily update review. Bye-bye.